What exactly is a chart of accounts and how do you work with it? That is the most common question I get from my brand new clients setting up their QuickBooks for the first time. Hi, I'm Hector Garcia. I'm a CPA and Advanced QuickBooks Pro Advisor. And one of the most common things that I do is help small business owners set up their QuickBooks correctly from the get-go. That way they have a pleasant experience in the long run using their QuickBooks. Now they may want to set up their QuickBooks to prepare a tax return, or maybe to give the documents to third-party lender or a bank, or maybe to monitor their own finances. In any case, your financial reports need to be spot on. They need to be right. That way you as a small business owner can rely on them. In the heart of all this is the chart of accounts. The best way to describe the chart of accounts is a list of financial categories in which all your transactions will be categorized into in order to produce eventually a financial report. There are two basic financial reports that are affected by your chart of accounts. One of it is going to be your profit and loss report. So if you click on reports and then you click on profit and loss, that would be the first one. Your profit and loss is going to contain your income, your cost of goods sold or your direct costs, your expenses, your other income, your other expenses, which are the sort of the extraordinary stuff, and finally your net income or your bottom line, which is really how much money your business made at the end. The second report that's affected by the chart of accounts is the balance sheet. And you need to look at a balance sheet at the same time that you look at a profit and loss in order to understand the complete picture of the financial health of your business. The balance sheet contains three main components: your assets, your liabilities, and then your equity. Real quick, your assets are going to start with your bank accounts and your petty cash accounts if you happen to transact in cash. Then it's going to move into accounts receivable, which is the total open balances of invoices you have outstanding that you have not gotten paid yet. Then you're going to have some current assets like inventory, maybe some short-term loans you paid to a third party, undeposited funds, which are basically all the monies you got from your customers that you haven't yet gone to the bank to deposit. You're going to have your fixed assets like equipment, truck, all the infrastructure, real estate, things of permanent value that you buy for your business. You're going to have your current liabilities, which is going to be accounts payable. This is the total value of all the bills that you've got from vendors that you have not paid yet. You're going to have your credit cards because your credit cards carry a balance and it's technically a loan from a bank, so it's a liability, something that you owe. You're going to have things like payroll taxes, sales taxes are going to be there. And any loans from banks, whether they're short-term loans or mortgages, they're going to be under the liability section. Then the difference between assets minus liabilities is going to be equity. Under equity, there's only three main things you need to see there. You want to see your retained earnings, which are your net incomes from the past. You want to see your net income, which is your current net income from your current profit and loss that matches the same date range as the report you're looking at. And then some sort of capital or owner's account where you track the money invested by the owner or distributions of personal expenses and that sort of thing taken by the owner. That being said, let's go into the chart of accounts by clicking on the gear menu on the top right and then clicking on chart of accounts. And then when you look at the chart of accounts for the first time, there's something that should be blatantly obvious to you. A whole bunch of accounts at the beginning are going to have something called a QuickBooks balance. This is the register balance of each of those accounts in the chart of accounts. As you scroll all the way down, you will notice that the column for balance will stop showing up any numbers at all. Right when you see the last equity account and the first income account, that's when the categories switch. That's where it goes from balance sheet accounts to profit and loss accounts. As I explained earlier, my balance sheet accounts are organized in this way: bank accounts, accounts receivable, current assets like inventory, fixed assets, accounts payable like open bills, your credit cards, short-term loans, long-term loans, and then your equity. Then your income accounts are going to be grouped by income, cost of goods sold, which are your direct materials, direct job expenses, your expenses, which are your administrative type of expenses, and then you can have all the way down the other income and other expenses, which is really for extraordinary, out of the normal business type of stuff. So in the chart of accounts, there's a couple of really important things. Technically, you shouldn't have a whole bunch of accounts with running balances of zero, because running balances of zero means that the accounts don't carry any balance. Now, there are cases in which accounts go up and down, and you always use them. In that case, keep them. Let's say, for example, you have a petty cash account where you put money into, you pay, and then you send the money back into the bank whenever you want, and you usually zero out that account. Then you don't want to delete that account because you're going to be using it pretty often. But if there's an account you're never going to use and it's zero, maybe a loan that you paid off, you definitely want to get rid of it. So you just click on the little triangle where it says view register and click on delete, and you can delete any accounts in there that have a zero balance. Okay, on the income accounts and the expense accounts or anything that's on the profit and loss accounts, you don't see a running balance, so it's really difficult to know whether or not that account is being used. So it's not as simple to delete the accounts as it is with the balance sheet accounts. Now, one of the important things is the reasons why. Why are the income expense accounts not showing a running balance? But the reason for that, and it has to do with the report I showed you earlier, the profit and loss account, it's based on a time period. You look at your sales and your profits in terms of last month, current year, last week, today, yesterday, 2 years ago, the last 3 years. There's always a notion of a beginning and an ending date when you pull those reports. And because of that, the numbers will vary based on which dates you use. So QuickBooks is not going to assume what numbers you're looking for and not just going to put any numbers in there. So they leave it blank on purpose to make the statement that I cannot give you a balance unless you're looking at a report and looking at a date range. Whereas with a balance sheet starts with zero at the beginning of time, and it's always accessible to go up and down. And until that business is closed, you're probably going to have assets, liabilities, and equity that have running balances. And because of that, QuickBooks can display the current balance based on every single transaction you've entered in QuickBooks up to today. Now, that may not be 100% accurate because there's a concept of reconciling the bank accounts and correcting errors and that sort of thing. But for the most part, those numbers that you're there should be accurate. If the numbers are way off and you have some big negative numbers and they make very little sense, you probably want to get with a QuickBooks specialist or an accountant to help you clean that stuff up, enter some beginning balances, maybe from last year's tax return, reconcile some bank accounts and some loans and credit cards to make sure you don't have any duplicates, missing transactions, or errors. But at the bottom line, if your chart of accounts is messy, if it's not correct, if you don't understand it, that means that you have to take some time to study and read each of these account names, make sure they make sense. If you're missing categories that you want to track, you want to create them simply by clicking on new, and you can create the accounts there. If you have stuff that's duplicate or redundant, you want to merge it or delete the ones that you don't need, because at the end of the day, those categories are going to affect how you do every transaction. For example, if you're sitting there and you're going to write a check or create an expense account of any sort, you are forced to choose an account. Like, you can't save a transaction. I can't say I'm going to go to this vendor and pay them $1,000 and just not put an account category. It's not an option. If I click on save, it will give me an error. So every user has the same constraint when using QuickBooks, which is they must pick an account. They must pick a category. And knowing which categories to pick, well, that's tricky, and that takes experience. And it's okay. It's okay to get it wrong. If you're working with an accounting professional that can check your books and clean them up and show you what you did wrong, you will learn over time. This skill, every single person learns. Nobody's born knowing how to manage a chart of accounts. Nobody's born knowing exactly what categories each transaction should get. But when you go create the transaction, you can have a drop-down menu of all your different categories. If you have things here that don't make any sense, they're more likely to confuse you than anything else. If you have duplicate or redundant transactions, like I have a client that has car, auto, automobile, gas, fuel, car payment, auto payment, lease payment, all in one chart of accounts, it's obviously very confusing. So you need to make sure that you condense that list only with the things that you need in order to manage your business. You don't want to have way too many accounts in there, and obviously you don't want to have way too little. So going to your chart of accounts and cleaning it up and organizing it is crucial in order for you to have a pleasant experience when entering your transactions into QuickBooks. Now, there's one little book I recommend called 475 Tax Deductions. I'm not the author of this book, so I'm recommending it because I like it. And it doesn't have anything to do with chart of accounts really, but as you go through this book, it explains all sort of the expense categories that are tax deductible and that are not. And for the most part, when people are doing things in QuickBooks and they're organizing their chart of accounts, it's probably for the purpose of preparing a tax return or preparing the work for an accountant to prepare the tax return, or maybe to manage their own business. But the categories that we'll use for the tax return will probably be the same categories they'll use for their own business. So having a book that kind of explains all those categories and gives you some in and outs, ifs and buts about it, could be a great reference point just to give you an idea more or less of how you should categorize your expenses or your transactions. So it's a pretty cool book to use, and I do recommend it because it's helped a few of my team members kind of get acquainted with expense categories. But I would definitely recommend investing in getting an expert in QuickBooks to help you set up a chart of accounts that makes sense. And that expert should be your accountant, your trusted accountant. If you don't have one, well, look for one that knows QuickBooks. And if you're working with QuickBooks Online, one that loves QuickBooks Online, because otherwise you will just get a lot of frustration from that person. Anyway, so I wanted to make this video as short as possible, even though I had to cover a lot of things in it. I want you to put in the comments below, what do you think is missing on this video about chart of accounts? What are your challenges with categorizing different transactions? If you read the book or if you checked out the book, I would love to hear what you think about it. And I'll put some links below in the description of some more expanded videos I have regarding chart of accounts. Anyway, thank you for watching. Hit like, subscribe to the channel, add some comments below, and I'll see you on the next one.